Good afternoon, everyone. We'll be getting started shortly, so we should start about 6:10 p.m. tonight. So thank y'all for coming. Help yourself to some dinner, and we'll be with you all shortly. Being good.
Right behind you. Don't let that make you not talk loud. Say.
All right. Okay, good afternoon, everyone, and welcome to Grow. We are so happy that you're here. Again, every week when we meet to talk about financial literacy and application, our program builds upon one another. So tonight, we're going to talk about diversifying your funding. And so we have a lot of great panelists here who have really started their careers in entry-level positions. They've moved on to big businesses as well as their own entrepreneurial endeavors. So I am going to turn it over to Jared Woods, and he is going to introduce all of the panelists, and we'll get started. Again, if you have any questions, we kind of roll with the flow, so feel free to raise your hand. We'll bring the mic. And if you're online, please drop your questions in the chat, and we'll get them answered.
Thank you. How y'all doing tonight? Hello, I'm Jared Woods. I am a senior business consultant for JP Morgan Chase. I operate a program for JP Morgan Chase called Diverse Business Strategies, or Coaching for Impact. And the point of this program is really for JP Morgan Chase to really give back to the community. My role, it really includes working one-on-one with businesses to do three things in essence. One, we want to provide these businesses with access to information, right? Information that helps them grow their businesses organically. Two, we want to provide them with access to opportunities, right? So you got information on how to organize your business the right way. Now you need those opportunities to grow your business the right way. And three, we want to help those businesses access the capital that they need, to grow their businesses, right? And that capital does not have to come from my bank. It can come from anywhere. As a matter of fact, I have partners on the panel that I refer my businesses to all the time. But I think this is going to be a great evening with some great information, and I'm really excited about this panel. I work closely with a lot of these folks, and I know that their knowledge and expertise is really going to add value to your, book of your book of knowledge. So, without further ado, I know it was said that I'm going to introduce the panelists, but I'm not. I'm going to let the panelists introduce themselves, and I think we'll go from my right to left, and we're going to start with my boy Sean with True Fund. Sean?
Hello, everyone. My name is Ron Sean Williams. I go by Sean from time to time because people have a hard time saying Ron Sean for some odd reason. And I am a business development officer with True Fund. True Fund is a nonprofit community development financial institution, and we provide lending to underserved communities in Louisiana.
Thank you. Melissa?
Good evening, everybody. My name is Melissa McClendon. I'm associate broker and co-owner of NOLA Home Realty Group. I specialize in helping people find real estate, helping them. I'm a real estate advisor, so kind of walking you from beginning to end with real estate, and that is what I do, all things real estate.
Thank you. Ramona?
Hello, everybody. My name is Ramona Sanders, and I'm a small business loan officer with Hope Federal Credit Union. And Hope is a credit union, but it's also what we call a CDFI, which is a community development financial institution that is really geared towards helping communities that are economically disadvantaged. Thank you.
Thank you.
Hi, everyone. I'm Elena Fingal. I am the owner of The Organized Money. I'm a financial therapist, and I help people organize their life, their money, and their business. My work has been featured in CNET Money, in Yahoo Finance. I am also a writer, a financial writer for CNET Money, and I also do content creation. So I'm on Instagram, YouTube, and also TikTok under The Organized Money. So I would love for you to follow me. I do a lot of financial content there, and I'm happy to be here.
Hi, everyone. I am Dr. Chanel. Can y'all hear me?
Yes.
I am Dr. Chanel Payne. I am the owner and lead academic consultant at CMP Educational Consulting Services. My business has two prongs. One, we do professional development and trainings for teachers. And secondly, we do academic support for children in K through 12. I started my business about 10 years ago, and we have serviced probably about 800 children and families around the city and countless teachers here in New Orleans as well as in Houston, Texas. I am a teacher that turned literacy specialist, that turned instructional coach, that turned assistant principal, and in-business owner, and now I'm transitioning out of education to nursing.
Okay.
I guess we'll talk about that at some point. I am as well on Instagram. You can follow me at CMP.edu. And on Facebook as CMP Educational Consulting Services. Our motto at CMP is we specialize in results.
Amen. I'm Jarrell Jones. Today's capacity, I serve as consultant for Ingenious Consultant and Strategy Consultant. My consulting company, I specialize in helping small businesses and entrepreneurs as well as nonprofits. I have several contracts with nonprofits where I serve as the technical director. Most of the time I go in to see how I can help a business increase grow. Usually that's through some form of technology. So I go in and see what technology we can embed into the organization, thus that will increase productivity and increase profits. And that's Ingenious Consulting.
Yikes. I thought I was smart, and then I let these people introduce themselves, and now I feel a little less smart up here. Very interesting, very talented panel up here, and we're going to start having a conversation, right? And if any time during this conversation you all have a question, believe me, here and now is the time to ask it. Don't be shy, please, and don't feel like you're interrupting us. We want to hear from what you want to hear, right? And we have all this knowledge up here, but we don't know what you don't know, right? So with that being said, we're going to start the conversation, and I'm going to start the conversation with my good friend, Elena. I've been knowing Elena since we were wee kids, and I'm really proud to be up here with her right now. But, what you do is so interesting, the psychology behind financing. And I have a little bit of experience in that, I feel like we've all been exposed to some myths about finance, as we've come up, right? And we were taught those myths by our parents and, those that raised us, and they brought us to a place where we started practicing the same thing because that's what they were taught. But, all these things, right, all are going to influence our behaviors and the way we carry ourselves financially as adults. So can you speak to that a little bit and talk to us about some of the main things that affect us, emotionally, and how that impacts the way we behave financially?
Yeah, so one of the main things is your money personality. So the same way you have a spiritual gift, the same way you have a love language, you also have a money personality. And there are 5 money personalities. It is the way that you were born. As soon as you were created, you had this type of personality as an inclination, a way that you will handle money. So let's talk about them real quick. The very first one is the saver. Everyone say saver. So the saver is the person that absolutely loves to save money. You don't have to have a reason to save it. You just like to see the number grow in your bank account. And so those are the people that you don't have to convince them to set aside money. They just love to do it. The second one is the spender, which is the opposite of the saver. You love to spend money, which means that you get a joy if it's from Saks or it's from the thrift store. It does not matter where you are spending money. You just love to spend it. You could be buying gifts for other people. You just enjoy that process, and that could be your money personality. The third one is the security seeker. The security seeker is a little bit different because they don't mind spending money. They just have to have a plan. They have to have these are your researchers. These are the people that if you buy a printer, you want to know how much the ink costs. You want to know how often do these printers break. These are the type of people that's going to do a deep dive before they make a purchase, especially a bigger purchase. The fourth one is the risk taker. These are your entrepreneurs, the people that are gamblers, the people that want to double their money, triple their money. They're always thinking about that big payday at the end. And then the last one is the flyer. Now, the flyer is a little bit different because the flyer is a person that is not moved by money, meaning that you don't make decisions based on money. If you know a job is coming and you're like, that job is not going to make me happy, I don't care how much they offer you, you are not going to take the job because your inherent happiness doesn't come from money. So what are all of these 5? They can go deep. There are primary, there are secondary money personalities. This is why buyer's remorse happens. If you've ever been in a store and you're just so happy to be in that store and buy a bunch of stuff, and then you get to the parking lot and you're mad and you want to return everything that you just bought, that happens because one money personality was happening when you're in the store. You were probably a spender in the store, but when you got to the parking lot, your saver personality kicked in, and now you're mad that you made this purchase. So what does this mean? Knowing just that, knowing your money personality helps you to know your triggers, helps you to know how to kind of navigate money, helps you to know how to budget it, how to save it. And I think that what happens a lot of times is we try and set really, really big goals, but we don't know the simple things of how we feel inherently with money, and then that causes us to hit a lot of roadblocks. That causes us to not know, okay, when mom said that we don't have McDonald's money, that put a thought in your head that planted into your system, and that followed you along with your money personality, and that happens to follow you for the rest of your life. And so once you know your money personality, you know how you feel, then you'll ultimately be able to make changes. And you'll ultimately be able to say, oh, I recognize this trigger. Let me make sure I make a different choice so that I am able to win with money.
Wow. So I didn't know about money personalities until today. Are you sure there's not another one called waster? Because I could waste some money. So that is really, really interesting. And I want to, click on a couple of things. And so you mentioned triggers. What kinds of things could happen to us when we were young? Like you just mentioned, mom saying, oh, we don't have McDonald's money, and then that carries over. What are some other things that you find common that carry over from childhood to adulthood, healthy or otherwise?
Yeah, so there are different money houses, and most people grew up in one of 4. So either you had a fearful house where they talked about money in a way that made it feel scarce, like, oh, we don't have McDonald's money, money don't grow on trees. Those types of messages tell you that money isn't easy to come by and that it's not circular. So you may feel like every time I get $1, I need to hold on to it because you grew up in a fearful house. You could also grow up in an unaware house. The unaware house is the one where money is not talked about at all. Maybe your parents may have not known, they didn't know how to have that conversation, or they knew about it, but they didn't talk about it with you at the dinner table. And because those conversations aren't happening, I think we just believe that when we turn like 25, we're supposed to automatically know how to deal, handle, move money, get credit. Like, you're just supposed to know these things, but no one taught you. And if no one taught you, how would you possibly know? If you grew up in a stable household, then you might have a little bit of knowledge, but it just depends on how much your family talked to you. They may have talked to you about banking or having a checking account, but they may have told you to stay away from credit cards. They may have told you don't invest your money. So these types of messages that we are taught from a young age, and you really start developing financial habits around the age of 7. So from 7 years old on up until you're 25, until you get your first bank account, your first credit card, all of those messages are kind of helping you lean and guide you toward your money. And it may not always be a positive thing. You may learn through experience on how to handle it better.
Man, that's really insightful because, and I'm listening to what you say, and I'm taking it personally because I can see some of my own behaviors and patterns that, trickled over from the things that I learned when I was a kid. But one of the things that I learned as I kind of matured and became older is that, no matter what it is you're doing, and no matter what mistakes you made, sometimes you don't know what you don't know. You need to surround yourself with people that know the things that you don't know. You need to forge and build relationships. That is one of the key things that y'all should learn about today, is building relationships is of the utmost importance. One of the myths that I came from, I grew up down the street from here. One of the myths that I was introduced to at an early age was kind of a fear of financial institutions. The bank's going to take your money. right? There's some other things like, you know, avoiding taxes and doing things like that. We'll definitely touch on some of that. But, you know, as I kind of grew older and learned, like, hey, you have to establish these relationships. And one of the most critical relationships you can have is with a financial institution. And so I want to kind of move the conversation over to you, Ramona. Ramona, talk to us about your role and talk to us about the importance of having a strong financial relationship with financial institutions such as Hope.
Okay. So, again, I'm a small business loan officer. So, my day-to-day job is really helping small businesses receive funding, you know, guide them, give them assistance with what is the best thing for their business. So I spend a lot of time talking to business owners and just trying to help them to figure out what's the best way to help their business. So also, I've been in banking for many years, so I've been in many different departments of banking. So, and a lot of that was in a branch. A lot of that was many years in a branch as a teller, as one of the people that are sit at the desk that you walk in and you open up a bank account, and eventually as a manager, a branch manager, and then I moved on into small business. So what Jared is talking about with relationship is, you know, it might seem scary to walk into a bank. You see this big professional office and people at desks, and they may look, you know, like intimidating, but don't be intimidated. They're usually nice people. But that's how you need to establish a relationship with somebody. If you go into when you open your first bank account, you want to walk into a branch where you're recognized. People know you. You know, they get to know you. So that when you need something, you can walk over to that Miss Wanda or Miss Ramona that's been sitting there forever, and you can go over there and have a nice talk with her, and you feel comfortable. You're not intimidated by this banker behind a desk. So that's why it's so important, is because, and you need somebody looking out for you. My clients, I have clients that I have gone to several banks for different reasons. Sometimes it was a promotion. I've gotten laid off before, things like that. But I have clients that followed me. And you know why they followed me is because, you know, I didn't just treat them like a customer, they're really a client. And sometimes, many times, they become friends. They have my cell number, you know, we text each other, things like that. So it can really turn into, not necessarily always a friendship, but I'm just trying to relay that you can have a more personal relationship with someone at the bank. It doesn't have to be the manager. It can be the teller that you go in and when you cash your check every other week. It just gets to know you by your name. So that somebody that you feel comfortable. Now, when you are more established and, you know, maybe you own your own business or you own a home, you know, something like that, then that is a time to really establish further relationships with a person that can help you buy the home, with somebody who does business lending. My business clients, when I help them, they need something else 2 years from now, they're going to reach out to me because we have that relationship. And it all starts with just trusting each other, trusting that person. And I can tell you, you might have a time where you don't click with a person. It happens, right? You know what? Find somebody you click with. It's okay. You can find somebody else because you want to be comfortable with that person because you're talking about money. And that can be really intimidating, but it really shouldn't be if you are talking to the right person.
And you're not just talking about money, you're talking about your money, right? Look, the bank has a relationship with your money. It does. The bank makes money off your money. You should take full advantage of everything the bank has to offer you or the financial institution has to offer you, excuse me, to lure you in so that they can get a hold of your money. And you can only do that by building relationships with the bankers. But not every financial institution is created equally. And you work for a pretty tremendous financial institution at Hope. Can you talk to us a little bit about how Hope is different from a traditional financial institution, being a credit union, but also actually being a community development financial institution?
Sure. I touched on that earlier. We're a credit union, but we're also what's called a CDFI, which is a community development financial institution. That means that our organization is mission driven. So our mission is to help areas that typically have not been able to get banking, loans, mortgages, things like that. Hope was started in 1995 in the Mississippi Delta. And the reason for that is that communities in that area couldn't get help at a bank. They couldn't go into a bank. They couldn't get the help they needed. It was started in somebody's garage, and it's grown into this. So because we are that type of organization, we have different products than a typical bank. So we have things that are easier for the normal person to be able to access. You know, our credit score, minimum credit score for lending is 600. You can't go to a bank with a 600 credit score and get a loan. So that is something that we do to help people that doesn't have the perfect credit, but we can help those people. We have, loans to help them with credit. Bank accounts where you only have to open it with $25, because that's intimidating too, and hard for people when you go into a bank. You got to open it with, even $200, $250, $1,000. Some of these bank accounts. All of our account is $25. So these are just different ways that a bank like Hope, the CDFI, can help just the average person that can't always get the funds, to open up a big bank account. We want to help everybody, no matter what your bank account is, no matter what your credit score is. I mean, there is a cutoff. We can't help everybody, but and we have lending programs. We have some grant programs right now. We have a program in Montgomery, Alabama, and where 50% of that loan is forgivable. So no matter what, if they borrow up to $250,000, 50% of that does not have to be repaid. So we have different programs like that because we can get some government funding that help us do those types of programs. So that's just an example of some of the things that we do that are maybe not the same as a traditional bank. And we have all the same products and services as a traditional bank does as well. It's just that we have those extra things that we can do to help people just on a little different level that you can't really walk into the door of a traditional bank and get many of the things that we're able to do for people.
Another cool thing about Hope is they're a credit union, so they don't have customers, they have members. Can you talk briefly about what that means, what the difference is between a customer and a member?
Well, members are actually part of the organization. Not just a customer, you're part of the organization. When we have board meetings and annual board meeting, things like that, then our members actually do have the ability to come to vote. Many of them choose not to, and that's okay, but if you wanted to, you can have a vote in what's going on in this institution because you're a member. So that's another reason why our products can be more tailored to the community that we're in, because we don't have to make a profit for stakeholders, people, a board that, and it's just to make money. This is not really, of course we need to make money to stay in business, but it's really an organization that is there for the members and basically owned by the members.
We have a question.
You said that as members, like you guys are members, so does that mean they own part of the company, like they have stocks within the company?
Not technically, but you have a say-so in what happens in that institution. So by voting, every year an organization or credit union has an annual stockholders meeting. And so you have input into what happens with that. So that's what I mean. Technically, I guess you do own a small part of that. If you're able to vote, yeah, we give you. But it really means you have a voice in what happens. You have a say-so in what happens. Should you choose to exercise it, you do.
I do have another question. I'm sorry. How do you qualify for the 50% off that?
Yeah.
Oh,
I had that question too, oddly enough.
I know.
We all have that question.
I'll take free money.
Oh, you want me to answer it? Really?
Yeah.
Oh,
We all
it's in
want
my-
you to answer.
I'm sorry. that particular program is in Montgomery, Alabama. So it's only for business owners in Montgomery. But we do have one in Louisiana, Mississippi that has a $10,000 forgivable portion for small businesses that are seeking contracts and procurement. So that's something that's available. So $10,000 of whatever loan we do under this program is forgivable. So we have something here as well for those certain types of businesses.
So I know that different credit unions have different reasons or different ways to become members based on whatever their specialization is or whatever the case may be. What is HOPES? Like, how do you become a member?
How do you become a member?
Yeah,
of
like
HOPE?
what are your requirements or the qualifications?
That's a really good question. Really, to become a member, you have to a member of any credit union or institution, you have to have a relationship, have an account, have a loan. You have to have a service with us. So that's we consider a member, really. Super easy.
So just opening a bank account, if you wanted to, you would immediately become a member. Take out a loan, you're a member of the credit union, and then you can have a say-so in some of the decisions that the credit union makes. But a credit union is, even though Hope is a credit union and a CDFI, it's still considered a traditional financial institution. And there are a number of different financial institutions that, again, you know, coming from where I came from, down the street, I didn't know anything about this kind of stuff. But then I started working in this world, and in this world, I met a good buddy, Sean Williams, or Ron Sean. Can you talk to us a little bit about, you know, the difference between you and a traditional financial institution, and also maybe touch upon what kind of products and services you offer and how you offer them differently that gives the customer ultimately an advantage of working with you?
So we are a CDFI as well, Community Development Financial Institution, but we're a non-depository CDFI. So what we do is we focus and specialize on lending to small businesses in the underserved communities. Where we set ourselves apart from a bank, like Ramona said earlier, we can go as low as 600 with your credit score, where some banks may want you to be at 650 or 675. We can go, you can come to us with a lower debt service coverage ratio, which is like a debt to income ratio for your business. Whereas a bank would say, oh, you need to be, and I'm just picking on banks, you need to be a 1.5, which means for every dollar debt you have, you make $1.50 in profit. Well, we can go as low as, you know, we would like you to be at a 1.2, but in some cases we could go as low as a 1.1. So we have lower requirements than what the bank does. We understand that we understand that not everyone fits into the bank's wheelhouse, and then that's where we come in. Now, I don't want you to get it confused that we're trying to steal clients from the bank. No. We're trying to help clients from the bank. You know, Jared, like you said, he'll refer people to us sometimes. He may say, hey, Sean, do you think you could potentially help this client? And then we'll talk about it, and we'll kind of have a conversation from there, right? And it's just building an ecosystem because we have the same goal of trying to help the community. We just do it in two different ways. One of the ways we do it is by offering a lower down payment requirement when trying to obtain real estate. So we have something called RAP, Real Estate Acquisition Program. And with that particular program, if you are a business owner, you've been established for a minimum of 2 years, we would like 3 years, but minimum of 2 years, and you want to purchase a commercially zoned piece of property, you could get into that property with as little as 5% down. Whereas a bank may say, hey, you need 20 or 30% down. So that's kind of where we differ a little bit. And we've talked about a lot of things over here, so I want to touch on some other things if you don't mind. Yes, ma'am. CDFI is a Community Development Financial Institution. Yes, ma'am. No, Remote Hope is a CDFI. Chase.
Chase
right,
is
Bank,
not, no.
They're not a CDFI.
What's the name of the bank?
The bank?
The CDFI.
Oh, mine? True Fund. TRUFUND. True Fund. One of the things Jared asked the question was about relationships. And relationships are very, very important, especially in the CDFI world. The reason being, underwriters see things in black and white. They only see numbers. It's my job to paint a picture for them to understand your goals and what you're trying to accomplish. I can only do that if you build a relationship with me. You're honest with me. You tell me what your goals are, your dreams are. Let's work together. Let's see what we can do. And we're going to have a well-informed conversation. I'm going to go to bat for you, if I can. I'm not a miracle worker. If you take a loss year after year after year, it's some things I can't do, unfortunately. But at least I can guide you, and that's where us as a CFI differ once again from a traditional bank. We also offer the TA or technical advisory services as well. So if I tell you no, I'm going to give you a game plan on how we can say yes next time. I understand that a lot of times, especially us in our communities, we're afraid to ask when we're declined for something. We're afraid to say, well, why did I get declined? Or how can I get approved next time? We'll just take that decline and walk off. I don't like doing that. I'm telling you, hey, look, if this was done differently, if you do this way, let's wait a year or so, and then we can revisit it. That's kind of where we differ when it comes to non-traditional banks. Not every non-traditional lending institution is created equally now. There are some out there, and I'm going to pick on them, that MCA loans. They're easy to get an MCA loan, which is a merchant cash advance loan. It's super easy to get, hard to get out of, right? You'll have a super high interest rate. You'll borrow $60,000. You'll be paying $5,000 for the rest of your life. Not all money is good money. So sometimes you got to put in a little bit more effort with us. But if you trust the process, I will get you there, one way or the other.
So I also used to be a part of the CDFI world, and it's really where I cut my teeth in a financial institution. I truly wish we had more time to talk about it, but Sean, if you could real quick talk a little bit about some of the major missteps, right? Starting out in terms of understanding and expectations when they come to see you. What's some of the missteps people take, and give those who would take that misstep advice on what to do instead?
Okay, one of the first ones I can think of, and I know this is going to sound mean, your emergency is not my emergency. Don't wait to the last minute to come and say, Sean, I need to borrow $100,000. I cannot move that fast. I know we have a process, and I'm just going to use, for example, it may take us 3 weeks to get a loan out. You need this money tomorrow. So building that relationship, understanding what our requirements are early on. Come see me when you don't need money. That's what I'm going to tell you. Come see me when you don't need money. That's the best way to do it. One of the other pitfalls people fall into is, and legally you could do so, you can write off whatever you want to write off on your taxes legally. That doesn't mean that I can give you a loan based on everything you've written off. I've seen people literally, they made $4 million in gross revenues, right? When you get down to that net operating income, which is all their deductions, $50,000, and you want to borrow $1 million. Yeah, but I made $4 million. No, you grossed $4 million. You wrote off $3.9 million worth of stuff.
Right.
I can't help you, unfortunately, right? So to combat that is to have a relationship with a CPA, have a relationship with an accountant. Go have those well-informed conversations, right? Say, hey, this is what my goals are. I want to grow my business to this phase, and they're going to advise you on what to do and how to structure your returns. Don't go to the person that says, I'm going to get you $10,000 back every year. Go ahead and get your loan from Uncle Sam. I can't help you, but go ahead and get your loan from Uncle Sam, So not being prepared. You come to me and you say, hey, I want a loan, and I say, hey, do you have your returns? I haven't did returns ever. I can't help you. If I ask you a question about your returns, I'm not expecting you to be an expert in your finance of your business. I expect you to have a little bit of a knowledge. If I ask you, hey, I saw you took a deduction here, what's that about? And you go, I don't know.
Not good.
Or if I'm asking you a question comparing 21 returns to 22 returns, and they're different, and you go, my tax person did that. I can't help you. I can advise you on, hey, have these well-informed conversations with them, build those relationships with those people. But, that's just another pitfall we fall into, right? Or my favorite, and I think this is more of a generational thing. Like Jared said, don't go borrow money. If you borrow money correctly, it works out wonderful. Prime example, line of credit. Most people take out a line of credit, which is just like a giant credit card, right? They will max that out and pay that minimum payment. And you will be paying on that for the rest of your life. That's not what a line of credit is used for. Line of credit is used to borrow what you need, pay it back, pay it down. If you want to make a huge purchase like a vehicle, get a regular loan. That way you have a fixed rate with a fixed payment amount that you're going to pay back on a fixed term. The line of credit, that rate fluctuates. Yes, it might be 2% today. It's going to be 40% next week.
You know, some of y'all might be too young to understand this old saying, but they say it takes a village to raise a kid, and it takes a village to raise a business as well. Y'all, this is the village up here. This is part of the village, right? We are all in the same boat, and all of us are trying to lift all of us at the same time. So please connect with these folks, you know, once this is over, so you can start forging those relationships.
I have a question from online. It says, is a HELC good to use to pay off your mortgage and purchase investment property?
I think what they were talking about is a HELOC, a HELOC, so a home equity line of credit, which is a debt instrument that you can use based on the value you've created in your house. So real quick example, if you own a home of $100,000 and you've paid down $50,000 of that loan, then you have $50,000 of equity in that loan. When you pay down $75,000, when you pay down $75,000, you have $75,000 worth of equity in the loan because you only owe $25,000. And so the question is it appropriate to use your HELOC to pay off personal bills? Is that what the question was?
Pay off your mortgage and purchase investment property.
You know what? That's probably a better question for the real estate guru. And so let's actually talk about that. It's a great question from online, but the purpose of, I think, all of us here is to help folks build generational wealth. One of the key things you need to do to build generational wealth, meaning you won't have to go through the same struggles as your parents. Your kids won't have to go through the same struggles as you because they're set up financially just a little bit better. Real estate is like key in doing that, right? So one, can you address that question? And two, can you talk to us a little bit about why investing in real estate is so important for building that generational wealth?
Right. So just to talk about, I'll address that question first. So when you buy a property, right, whether it's a single family, multifamily, what happens with real estate is it's what's called appreciates in value. So that means it goes up in value. So on average, a piece of property goes up in value of about 3% on average. Some areas are higher, some are lower, right? So if you have that property, you're paying your mortgage, you're living there, every year your value is going up and you're paying that balance down. So what happens is you create what's called equity. So equity is the difference between what you owe on the property and what the value is. So let's say I buy a property for $100,000. I pay on it, I'm living in it. 5 years from now, it's worth $150,000. So I have $50,000 in what's called equity. So to answer that question, what some people may do is they may tap into that equity, they may take a line of credit, they may refinance and pull out cash from that refinance, and they may use that money to do something else. In my opinion, that's a great thing to do. I wouldn't tap out all of my equity, but if I have a property that I paid on, I've had for a while, and I have a good bit of equity, I will put that equity to use. So I would use that equity to, let's say, because usually a bank will allow you to only borrow about 80% to maybe some 90%, so you can't take out all of it. But the portion you can take out of it, you can use that, cash out, and use that as, let's say, a down payment to buy another investment property, to buy something that's going to generate income for you every month. Or you might have enough equity you can pull out and pay for something cash. So equity is a powerful thing. And we were talking about generational wealth, right? So one thing that real estate gives you is generational wealth. It's a way to purchase a piece of property that you are paying on, you are building value in, and eventually you might be able to pass on to your kids. You may be able to sell. If I'm building up equity, let's say I outgrow that property, and in a few years I want to sell it. I can sell it and make a profit and use that money to buy something else. Another thing that's real common in real estate is what's called house hacking. I don't know if you guys have heard of that. That is basically taking the property you live in and using it as a way to make money. very smart. I think, you know, if I could go back to being 20 something years old, I would have done it a million times, right? But buying a property, when you purchase a property, let's say with the FHA loan, which is a very common loan for a first time home buyer, very low down payment, about 3.5%. So if that's $100,000, that's $3,500, right? You can pull that from different sources. Your mom can give you that money. You can pull it from your 401k. You can save for it. So very low down payment. And you can go and buy up to 4 units. 4 units, you can buy a fourplex. If you have a VA loan, let's say you're a military veteran, you qualify for a VA loan, you can do 0 down payment. So you can go and buy up to 4 units with no money down. And what's called house hacking is that you can do a loan like that, buy a property up to 4 units, live in 1 unit. You have to live in it for 1 year, right? Those other 3 units, you can rent them out. So let's say you rent them out, I don't know, $900, $1,000 each. You're making $3,000 on those units. You can use part of it, pay your mortgage, so you're living free. The rest of it is just, that's your profit, right? And you have to stay in it for a year. What I would advise you to do is in another year, after you've met that qualification, sell that property, buy something else. Because you can only do something like that one time. So if you go in as an investor and you want to buy a multifamily, you're looking at putting 20 to 25% down. So this is a hack. It's a way for you to put a little bit of money down, go in, negotiate. Right now we're in a buyer's market. So you can go and negotiate, get your closing costs paid. You might be able to buy a property with little money, and you have yourself an investment property.
Y'all, that's called a cheat code, right? If you're paying rent right now, you are in essence paying someone else's mortgage. If you had your own mortgage and rented out a piece of your property, somebody else would be paying your mortgage for you. And that's the hack that we're talking about. I really want to address, I'm sorry, we had a question? Oh.
My question was with the equity loan. So if you take $50,000 out, you 80%, whatever it is, of your equity, is that now like added to your mortgage? Like I'm sure they don't just give it to you just $50,000 for free. Do like they add like 1,000 to your mortgage, 500 to your mortgage? Like what's the percentage that they add to your mortgage after you take out the equity?
So it varies, right, depending on the interest rate. So let's say you take a line of credit. That's almost like a credit card. So you're taking, if you have a property that's $200,000, you purchase it for $200,000, it's worth $400,000. So they may let you borrow, let's say, $180,000, right? So they give you a line of credit. You pull what you need to pull as needed, but you're going to have an interest rate, and you're going to have to pay on that monthly, whatever you borrow. Or you could just leave it there and borrow it as you need it. But it's like a resource for you. Or you can do what's called a cash out refinance, where you refinance the property, decide how much you want to pull out. You might want to take some of that money out to buy something else. But they're going you're going to have to pay almost like a second mortgage, or your balance on your mortgage may increase when you take the cash out. So if you had a balance of $100,000, you take another $100,000. So now you're going to be borrowing $200,000. So your monthly mortgage is going to be based on $200,000 with whatever the interest rate is at that time. So you have to be careful with it. You don't want to just willy-nilly do it. But if it's a good thing for you, if it's going to make you money or be a smart investment move, you definitely want to do it.
Okay, thank you.
Certainly. One last question for you. If someone doesn't own a property and they're interested, right, what should they come to the table with to put themselves in the best position to acquire a property that they want?
So I was just having this conversation today. I will say this, there's never the right scenario, right? Everybody, I have a friend of mine, her son is an engineer, about 25 or so, and he wants to buy a property, but he's waiting for this, waiting for that. There's never the right time. But you do want to make sure that you've looked at your credit. You want to make sure that you're paying your bills on time. If you've fallen into some issues, right? It's life sometimes, right? You want to work on that. You want to get with somebody. You may want to sit with a lender. Definitely get with a realtor, because they can guide you to lenders that can help you with your specific scenario. Get with the lender, see what you look like. Because if you don't know where you're going, you don't know where to go. So see where you look at what you look at, what your credit looks like, and start working on that so that you can get going and start getting your budget in order. Yes, ma'am. Get a budget. Get a budget. Know what, if you don't know where you're going, you don't know what to do. So get a budget in order, and try to live off that budget. Try and pay some of that debt down. Get your money in order. Save some money just to get you prepared.
You know,
When you are able to look at what your budget looks like, when you go sit before people, you can get money. You're not going to get no money if you don't have a budget. No matter what you think your taxes were, that's not what they're looking at. They're looking at that budget that you put together. And that also helps you get, if you see that you have a problem on your credit score, then you can get that fixed before you sit before the people. Then you can get money. I've built 2 houses from the ground in my lifetime. The way I did it, I lived on a budget. You've got to have a budget.
and that's an excellent point because we all actually live on a budget whether we want to or not. You probably keep your budget in your head. The point I think she's making is put it down and honor the discipline it takes to live on a budget so that you can put yourself ahead. Question, brother.
Is the interest rate on the FHA loan, is it fixed or does it change with the market?
So usually it's fixed. It's a fix going with today's rate, whatever that is. And if you're looking for a property, they're going to lock you in the interest rate once you find a property that you go under contract with. And I just want to say something I didn't mention with the budget. If you have credit cards, get those credit cards down to 30% or lower, because they're going to look at your debt to income ratio. So get those credit cards down. We want them to zero. We want you to pay them off every month, but sometimes you can't, but try and get them down to 30%.
Truly. So, moving the conversation, we're going to shift gears a little bit and start to talk a little bit about technology. And so, hey, it's 2024. It's about to be 2025. I'm not going to lie, stuff is getting scary. Man, but it's scary because it's new. And with this new territory comes opportunity. And I seen all the tiki-taki dances and all that stuff, right? And I know people making money on the internet and they're using technology, but other than the obvious ways that we've kind of seen, this new wave of folks making money on the internet, there's a kid who opens toys and this dude gets like millions of dollars, and it just makes me so angry. Other than stuff like that, right? And I'm not saying that stuff doesn't make money and it shouldn't be, if you're talented, put it out there, right? Take advantage. But what are some of the other ways that we can start leveraging technology to start increasing our residual income and start really, being kind of first movers when it comes to when new technologies are introduced? People make money off them. How can we get, in on that, brother?
I think the best way to leverage technology is to first be aware of what your expertise is. And a lot of times we are imprisoned by our 9-to-5s and what we do at work. But if you look at what your skill set is, you can figure out ways to increase your income by leveraging that skill set. So if you're a chef on your job, figure out a way that I can be an entrepreneur as a chef. And then you go to a Hope or a True Fund to get investment income to then increase that. And there's so many ways that you can learn whatever it is and increase your knowledge and your skill set. For myself, I knew I was creative. I had background in construction, and I'm good at finance, administration. So I still had a 9-to-5, but I was able to increase my skill set. There's always YouTube University, of course. There's Teachable. There's courses online that you can learn different skill sets. There's also Canva. I don't know if you've heard of Canva, where you can design graphics, your own flyers, and business cards. A lot of those things are low-hanging fruit nowadays, when before you had to hire companies to do these things for you. But now you can do it all yourself. Take whatever you do for your 9-to-5 or something you're passionate about, so you don't have to get rid of your 9-to-5 job. Get a technology or system, and then you can always do that for somebody else. So if say for this event, we needed food. So there's some chef out there that may be cooking for their family, but they can provide food for an event. And then you market yourself as that, and you market that expertise using social media, using other forms of communication and collaboration. I believe in creativity, collaboration, and then consistency. Once I consult with somebody and I build that relationship, they're looking at that level of excellence and consistency, and are you hitting a pain point? Somebody needs the skill that you provide. So figuring out who that person is and consistently providing that skill set in excellence.
We got a question.
I remember you saying about a 501c business that you have. Yeah, that the 501c3.
Yes.
How do you go about getting one of those?
So even now, there is usually with the 501c3, it takes time. I think right now there's about a 300-day wait just to get approved, but there's also a Form 1023-EZ that you can fill out to do a 501c3. So if you know over the course of the next 2 or 3 years, if your 501c3 will make less than $50,000, you can do this form online. I believe the cost is about $200, and you can have your own nonprofit. It takes about 2 weeks. I actually just did one a few weeks ago, and you'll have a nonprofit. You still need to operate based on regulations, have a board, all of those things, but that's a way that you can really do it yourself. A lot of things, in LLC, you can do it yourself. And all of these things you can learn really by watching YouTube videos and teaching yourself how to do it. And a lot of times people talk about nonprofits and think that it's not meant to make money. It's still meant to make money. There's just not there to provide money to stakeholders or a business owner. So if you have dreams and aspirations of helping the community, you can establish your own 501c3. Of course, you still have to have a board if you hire an executive director. So you can make a profit, but there's things that you have to operate under because it's a nonprofit. But there's streamlined ways to do nonprofit setup and organization.
And to be clear, a nonprofit, no, they don't pay taxes, but they have to report. Yes. And if you don't report, it can be expensive to not report. So, but I often encourage business owners that have social aspects to their business, like, hey, you know what? You might want to think about starting a nonprofit with this to go alongside your business, because it's two separate entities. But based on the work that you do, you work with kids, right? You educate kids on, credit or finance, right? Just getting them prepared, like we wish we would have had, when we were younger. You can get a nonprofit and attract dollars that aren't affiliated with sales, right? And that's money that you don't have to pay back. So it is definitely a good idea and something, if you have a social aspect to your business, you should consider. But I want to stay on tech for a minute and talk about one of the scariest things that's out there right now. And I think everybody knows I'm talking about AI. AI, not Allen Iverson, but artificial intelligence. By the way, ChatGPT wrote all my questions today. So
exactly.
Leveraging AI. So first of all, AI is well beyond just what ChatGPT can do. And by the way, ChatGPT can do some pretty amazing things. Can you talk about maybe some of the other applications of AI and how we can start to learn how to take advantage of those?
So again, I said I operate in several capacities, and Candace, I work with Candace as well. So some of the things we do, we don't always have the staff to do all of these tasks. So especially if you have a job and you're trying to run a nonprofit or run your own business, you can leverage ChatGPT, Claude. There's a lot of technology, Apple Intelligence now, to do a lot of tasks in a short amount of time. If you want to market, you want to do emails. Now I'm able to take a graphic, upload it to ChatGPT, and tell it, make me an email using this graphic. It's going to interpret the graphic and then write all of the content. And then say, hey, make me a marketing plan based on this new product. And it's going to help strategize. I call it my new assistant, with no salary. So it's able to do a lot of the low-hanging fruit, low-hanging work for you and save time and save yourself money. So now that money that you would have paid someone to do these tasks, you can keep it for yourself, as well as it's teaching you things that you may not have learned yourself or may have had to pay to learn yourself.
Man, that's really amazing. Who in here actually uses in some form of AI kind of on a daily basis now? Wow, wow. So yeah, it's scary, but it's not going anywhere. So we might as well get used to it, and we might as well take advantage of what it has to offer us until the robots come for us. But Dr. Payne, right? Oh boy. So I don't know if y'all heard in the introduction, but this woman has 10 teen jobs. You do a little bit of everything, and so you have transitioned from one career to another, and you've done this multiple times. One, I want you to kind of take us on that journey a little bit. Like, what things happening in your personal and professional life made you feel like those pathways were the best for you? And what, I guess, guidance would you give someone in terms of, hey, you want to transition your career from one thing to another, or you want to learn a new skill set? What guidance would you give someone who had those questions?
Okay, so first let me say that starting out in education, I knew that I wanted to be a teacher, just a teacher, since I was in second grade, and that was because I had an amazing second grade teacher. And so I went to school, and I worked hard, and as someone mentioned up here, there were some bumps in the road, and life happens. But I achieved my goal to become a teacher. And you know, I think about this often. How many of us say that we want to be something as a child and then actually grow up and do it? So I started teaching, and I loved it. I still love it. I loved it, and I would go in there and I would teach, and I would have games, and I would play music. I loved it, and I love children. And so about 10 years in, I was just like, I either have to move out or move up. It's never the children, but it started to wear on me that children were struggling to read, children couldn't do basic math, children couldn't write. And it was not what I signed up for anymore. But I stayed in another 10 years. I stayed in schools another 10 years while I worked on my master's degree and my doctorate degree. And it was in my master's degree program. I was sitting in class one day, and I was like, I have to start a business. Knew nothing about starting a business. None of my family members had businesses, for the exception of my dad's mom, which was my grandmother, that I never had an opportunity to meet. And so it wasn't something that I grew up around. It wasn't something that I knew anything about. But I sat in that class that day, and something came to me, and I said that I have to start a business. And so my principal had got me into presenting at conferences and presenting to the staff in the district. So I was like, okay, I'm going to start a business doing that. So in 2012, I moved home. After I finished my coursework for my doctorate degree, I still was working on my writing for my dissertation. I moved back home, started working at a school, making way less money. Left that school, and let me just say before I go any further, I got to a point where I was just like, if I'm not happy, I'm moving around. So I left the charter school, and I went out to Jefferson Parish. I stayed in Jefferson Parish for 2 months. And I was just like, can't do it. Ended up getting a job. I was already teaching at SUNO as an adjunct professor, and they brought me on full time. So I was like, okay, this is good. But in the meantime, I had started creating for my business. Didn't know anything about creating a brochure. It was Valentine's Day, and I was single, and I sat at that computer. I started me a Facebook page for the business. I worked on a brochure, and I was at work with a colleague, and he was like giving me feedback on the brochure, and he was like, call Sylvans and see what their fees are, and if they have an entrance test. And I was just doing all the research to do it, and I started the business. Started doing my tutoring in 2014 in February, and I was not getting any clients. And so I went to my aunt who started a medical assistant business where she like trains people to be like CNAs and phlebotomists and things. And I told her, I'm like, I'm doing all of this stuff. Like, I'm going to the park, I'm going to malls. Like, I was hustling, passing out my literature, passing out my cards, going to the library, sticking them on boards, grocery stores, everywhere. And I'm like not getting any customers, right? And then one day I got that first client. And I know exactly, I can see that child's face just as clear as day. I got my first client, and it just snowballed from there. And it just started building and building and building and building and building. But here's the thing. When you start a business, it is not necessarily a way out of your job. So I was going to my job every day, and I was leaving my job, going to run my business to 7. So I was like working from 7 in the morning to 7 at night, or 7:30 at night. And still working on my dissertation to finish my doctorate. So if I had to be to work for 9, I would get up. So normally I would probably get up at 7, but now I'm working on my dissertation and I'm going to work. So I would get up 2 hours early, 2 hours to work on my dissertation before I got started on my day, and then 2 hours at the end of my day to work on. So if I went to bed at 10:30, now I was going to bed at 12:30. And so finished my doctorate. My business was going good, and I started again feeling like I needed to get out of education. But I felt like I had got all of these degrees in education, and I was just stuck, and I didn't know how to get out. And so I'm dating this guy, and I'm telling him, okay, at the end of this year, not going back, I'm just going to run my business. And he was like, you know, why you gonna do that? You know, just not supportive.
Okay.
And so, you know, and I'm just like, if you have a woman that don't ask you for anything, the least you could do is support her. So I dumped him, and then I when COVID came, I was at a school, and you know, God just he's always blessing me. You know, it's like, my mom used to always say, God bless the child that has their own. And she used to tell us that when we was younger, and didn't really understand it. But it kind of means like when you have your own means and your own resources, then God continues to bless you. And so, so COVID came, and so we were virtual. And so we were able to stay home, wasn't spending money because I wasn't going anywhere. So I was like, I'm going to save as much money as I can. This is my last year. This is my time to get out, to exit. And I was scared. I'm not going to lie. I was afraid because I was so used to getting that steady paycheck. I didn't know if I could do it. I knew I was making the money, but I was not sure if without that steady paycheck I could do it because, you know, sometimes my tutoring parents are a little off. They'll come, then they'll leave, then they'll come back, then they'll leave. And so I left. And I laid across my bed and I cried and I cried and I cried. And I cried because this is a career that I chose and that I wanted to do. And now I'm to a point where in the mornings I get up and I'm 9 minutes away from my school and I'm rushing to get dressed because I laid in the bed to the last minute because I didn't want to go. And so when you get to a point where every morning you wake up and you want to call in, it's time for you to exit. But don't quit your job. Create you a plan to exit your job. I didn't know when I created this business that was God creating a plan for me to exit because he knew I was going to get exhausted. He was helping me to create a plan to exit whatever situation I was in professionally because I had my own. And so COVID came. I decided I was going to leave, and I'm sitting at the table with my daughter who was 21 years old, and I'm telling her, look, you have your job, you have a car, you have to not waste your money because I'm not going back. And so, and I told her, I said, look, I might have to go back. I don't know how this is going to work out, but I can't go back. And so she said, a 21-year-old, well, how many clients do you need to be okay? And I said, well, you know, I have about 15, 18. I could just be okay. And that school year, I ended up having double that.
Wow.
And so, I go places and people call me the tutoring lady. And, you know, it surprises me because I'm not even knowing that people know about the services that I provide. And so that business has allowed me to give back to the community. I do a trunk or treat every year. I'm trying to decide if I'm going to do it this year because I'm tired. And so in the midst of all of that, LCMC and Chamberlain University, the president of Chamberlain University is on TV saying, we have scholarships. We want people who can finish a nursing program in 3 years if you already have a degree. And I was like, And my smart butt got on LinkedIn, found the president of the university, sent her a message, told her that I was transitioning out of education. I had thought about nursing when I was at 10 years in, and I was like, I needed to get out. And so she was like, okay, I'm going to link you to, LinkedIn is a friend. She said, I'm going to link you to the president of the University in New Orleans in the email. I sent her my email. She put us in the email chain. And the next thing you know, I had a full scholarship to get a nursing degree. Wow. And so I've had people to ask me, well, why are you getting another degree? It was free, first of all. You never turn down a degree that's free. It was free. So I went back to school to get a nursing degree. Secondly, it was my second choice as a profession. And so I got in the program, and I was scared. I was like, I hate science. It has always been my struggle, science. But I got in the program, and the first session passed, and I did good. And then the second session passed, and I did good. And then a class came, and I failed it. But guess what? I went my behind right back and took it again. And I passed it. I actually made a B in the class. And so I'll be graduating in April. I got an internship at a hospital here in New Orleans. And I know I work on that nurse because I'm like, I'm always like, can I do this? Can you let me stick? Can you let me do this? Can you let me do that? And they're like, yeah, come on. You want to do an enema? And
No,
so, because they don't want to do it, but then they know that I want to learn, and that has always been me. And so maybe that's why I keep going to school over and over and over again, because I enjoy teaching and I enjoy learning. And so, currently I'm like adjunct at Tulane. I'm running my business. I have about 26 kids. I'm in school. I got a paid internship at the hospital. And so, when people call me, except for Candace, I sometimes do not answer the phone. I am not good with writing without, using the calendar, so I forget stuff. But what I want y'all to take away from this is that when you find yourself in a place and you're not happy, move around, but create you a plan to move around. If you find something that you're good at, start a business. Baking, sewing, working with children. If you find something that you're good at, start a business.
Yo, that's ill right there. First of all, y'all, give it up. This woman is a doctor, doing it all, making me feel like I'm lazy. But what I really loved about what you said, and really what we've all really talked about here, is the journey you just took us on really kind of embodies everything that we really just kind of talked about. The relationships she forged and she took advantage of, the one she got rid of that was holding her back. You feel me? The resilience, the foresight, the passion, doing what you love, that's smart. And that's how you're going to make it ahead, right? You're not going to make it ahead just working for somebody else. You got to be doing what you love to do. And another thing that I noticed is, I have taken something from what each and every one of these people have said, but just analyzing my own life, and I want you to do the same, right? I have investigated and looked at my own financial behaviors, right? I've gone from career to career where my career wasn't fulfilling enough. I've used real estate as a diverse stream of income. I've leveraged technology to rent my house out. The real estate that I've invested in, I've used that. I work with financial institutions, not just to make my own money, right? But also, where do you think I got the money to get my rental property, right? I've leveraged every single last one of the areas that these folks have expertise in. And although we are out of time, is that correct? Okay. Okay.
Okay, so I have a question just because a lot of us here are college students and we're just at the beginning stage of trying to build our finances and figure out what we're trying to do. And so I want to know how we can take the information that everybody has given us today and try to start applying that to our lives now so that we're at the stage that y'all at when it's time. Like, we try to be like y'all.
I like your swag. You feel me? And you said some nice things about us. I think first things first, y'all already started. Because look where you at right now, getting this information. Your peers aren't here, right? So it's one thing to get this information, it's another thing to apply it. One of the things that I said I really want you to take away from here is building relationships. We're not going nowhere. I got business cards, they got business cards. These people are experts in their field. You want to learn something, talk to an expert and build a relationship. So network is the best thing that you can do right now. And yeah, you're going to get your own experiences and you're going to stumble sometimes and you're going to make your own mistakes. Hey, sometimes that's how we learn. But you got guidance on your side too. This is your village. Other questions, please, y'all. Good. Well, listen, man, I want to thank you, my panelists. Yo, this has been a phenomenal conversation. I actually have more questions I want to ask them, but let's do this. Obviously, more. Do it again. Thank you all for your attention, your participation. Some great questions. And listen, when y'all want to connect with us, just let us know. I'm going to stay here. I got business cards. I love to exchange contact information, and I'm sure my colleagues would do the same. Thank you guys so much.
All right, well, thank you all so much for coming. I am going to challenge you all to make sure you do not leave out of this room without getting one of the village's phone number, okay? And then they did mention that LinkedIn is your friend. So on October 2nd, our last session, we are going to take headshots for you all for free so you can have a LinkedIn picture. So make sure we see you on October 2nd. Yes, you guys can get headshots too. So make sure you guys connect with one of the panelists. They are your resource. We're here to help you. The most important thing is that we are sharing information, but we want you to apply it when you leave out this room. And if you're online, please continue to ask your questions. We'll get those answered for you. Make sure you text the number to register so we can have your contact information. Again, thank y'all and have a good night.